It's a different congressman. They're all congratulating us. Yeah, it's lucky it is, right?
So hello and welcome to this week's Forex fundamental and technical analysis video for the week starting the 26th of May. So we'll get straight into it. So trade and economics week ahead. Markets are bracing for another turbulent week driven by renewed tariff threats from President Trump targeting the European Union and Apple. So the tariffs are back in the picture again. For the last 2 or 3 weeks, I'd say, trading has sort of reverted back to the universal fundamentals. So the interest rates, inflation, things that I track on this chart, and it's been good for the last 3 weeks. We've not had any sort of major risk on or risk off scares in relation to the tariffs. We've sort of been going off what the central banks are doing, GDP, inflation, interest rates, all that sort of stuff, which is, to be honest, easier to trade. But now, recently, I think it was on Friday, Trump came out and said he's going to put a big tariff on the European Union. So trading negotiations mustn't have gone well between the US and the European Union so far. And you could see it on the charts what happened. We'll go through the charts in a little bit. But pairs like US yen, you can see here, here's the big candle here. 12 o'clock, a massive spike. What else was there? The pound sort of benefited from it. Commodity currencies did have a bounce as well, to be fair. So, and this is showing just as well how the US dollar has sort of, in terms of the tariffs, has lost its safe haven class, really, because usually in a risk-off event the dollar would strengthen, but the dollar sold off on Friday after this news. So going into next week, what I will be looking for is basically pullbacks for risk-off currencies, so JPY, Swiss franc. But to be honest, at the minute as well, if we look at the indexes, the Swiss franc is sort of at fair value now on the index. Ideally, we want a bit of a pullback to here, and then we can go long on the Swiss franc, possibly against the dollar or against a weaker currency such as NZD, something like that. And the JPY is at these highs, so I don't really want to buy it, even though we've got risk off, and it's a risk off currency, it's a safe haven asset. I don't want to buy up here, so I need to wait for a pullback. So next week there may not be any opportunities for me for the way I trade, but we will see. Investors will focus on a commentary from Fed officials as well as the FOMC meeting minutes. Key US economic indicators include personal income and spending, the PCE price indices, durable goods orders, goods trade balance, second estimate of Q1 GDP growth, corporate profits, pending home sales, and S&P case Schiller Home Price Index. Globally, monetary policy decisions from South Korea and New Zealand are on tap, whilst investors will digest inflation figures from France, Spain, Italy, and Germany. Q1 GDP readings from Turkey, India, Brazil, and Canada will also be closely watched. Finally, Germany's GfK consumer confidence is expected, as well as Japan's industrial production, retail sales, and consumer confidence figures. So yeah, there's quite a bit of data releases next week. I'll just have a quick scan of the economic calendar. So Tuesday's nothing too major on Tuesday. Got the Royal Bank of New Zealand interest rate decision on Wednesday, early on Wednesday morning. They are expected to cut by another 25 basis points, but it will be in we knew that already, so that's priced in. It will be in the press conference. We'll see what the Bank of New Zealand say and going forward. So that's usually the case. What you want to do, you want to look at what the bank's saying, see if they're dovish or hawkish, and yeah, I think they're going to be dovish, because if we go to the chart, New Zealand dollar, GDP isn't great, but it's the inflation here still above the 2% target, and it was rising last month. It went up. The inflation went up last month, so they probably will still cut. Just depends how dovish they are in their analysis. Thursday got GDP estimates for the USA. So yeah, there's quite a few. Unemployment for Japan, retail sales, industrial production, GDP for Canada, and some inflation rate for Germany. So there's a few major data releases next week, but to be honest, the tariffs are going to be really the main point that investors will be concentrating on, because if Donald Trump puts 50% or whatever tariff it is on the European Union, that is going to affect things in a big way, to be fair. So we've seen it before now. So when the tariffs came on a couple months ago, we know the play now. It's a risk-off environment, and the dollar should weaken really. And I'll go into that as well. The dollar is actually seen as quite a big sell. The more I'm reading about it, the more that the dollar is a sell pretty much for the year really. It's more the politics involved with it, the Trump isolation policies, and all this stuff with the tariffs is sort of weighing on the dollar, and the euro has benefited from that. So yeah, I'll move on to the MUFG analysis. So Trump fuels more uncertainty as US assets suffer. So at the time of writing, the US has this week suffered a week of triple selling, with the 30-year yield up 6 basis points, the S&P 500 down 2%, and the US dollar on a DXY basis 1.7% lower. The markets were looking a little more stable today, but President Trump has seen to that by announcing that he would implement a 50% tariff on EU imports effective 1st of June. I think that's a bit of a dig at Trump there. The markets were looking a little more stable today, but President Trump has seen to that. Euro USD has dropped sharply on the news, but remains higher this week. So that's quite interesting actually, because if they do get a big tariff on them, that should really be negative for the euro, but it ended up higher on the Friday and the dollar ended up weaker, which really shows in a way how the tariffs seem to be more of a negative for the dollar. That's the way I see it anyway. I mean, we could get a bit of a sell-off in the euro, but the dollar sold off quite in a big way. So it might be risk-off flows more than anything. And the euro is seen as a risk-off currency, so it could more be a risk-off thing than a fundamental thing, because the tariffs, a 50% tariff on the European Union should be negative for the euro. So yeah, a 50% tariff could result in a big hit on Eurozone GDP, there we go, and would likely prompt the ECB to cut the policy rate more aggressively, so that is very bearish for the euro. Still, we can't be sure of course that this action will be followed through. So this is the thing as well. Is Trump going to follow through? Trump likes to use these tariffs as sort of a bargaining chip, and he starts high so he can get a sort of middle ground. It's basically just negotiating hardball. Trump cited an 80% tariff on China that felt right, so this announcement could yet change. So yeah, that's another little bit of a dig at Trump there, I think. So it's like Trump cited an 8% tariff on China that felt right. So they're just basically saying he's just chucking out these tariffs because of a feel right. There's no sort of thinking behind it. I don't think that's the case, but what this does show though is that investor concerns over US assets due to very poor economic policy management remain valid. This could end up reinforcing worsening dollar sentiment that results in little negative impact on euro performance. This week we assess the Bank of Japan policy outlook and the impact of JGB selling this week. So trade ideas for MUFG. Following Trump's EU announcement EU tariff announcement, we are cutting our long Euro NZD trade idea, but maintaining our short USD JPY trade view, given that what we see as a favourable outlook for the JPY in current market conditions. So yeah, JPY at the minute, big buy. It's the only currency on a hiking cycle, and it's also going to benefit from any sort of risk-off events, and I've got a feeling there's going to be quite a few more risk-off events this year. So to be honest, JPY, and I made a bit of money this week on USD JPY, CAD JPY, Swiss franc JPY. I'll go through them a little bit later, but I could have held them for even longer, but made some nice trades on that this week. So now just looking for pullbacks. JPY flows. This week we take a look at high frequency flow data that shows very large weekly purchases of foreign bonds by Japanese investors, but also a sharp reversal of record foreign investor buying of Japanese bonds to selling. So yeah, it's all very bullish for the JPY at the minute. And I'm not going to read all this, but yeah, this is JPY. Bank of Japan has a greater interest now in stronger yen, so that is massive as well, actually. So the Bank of Japan wants a stronger yen, which is interesting. They've always wanted a cheaper yen for exports, but yeah, I'm going to read that after. I'm not going to read all that now for the video, but I will read that after. That's quite a big thing. It's premium, yeah. So to be honest, yeah, USD JPY is a big sell at the minute. It's a big divergence between the two currencies. So that's a little bit of the fundamentals. I'll quickly go through the chart. Australia is ranked number 2. Canada's ranked number 8, and it's moved down 3 places. Australia's moved up 1. Eurozone is number 6, and it's moved down 1. Japan is number 4, and it's moved down 2. New Zealand number 4, it's moved up 3. Swiss franc is number 7, and it's moved up 1. United Kingdom's number 1, and it's moved up 2. And the United States number 3, and it's moved down 2. So yeah, but the fundamental chart, like I've said in previous videos, it's really important to keep a track of all these macroeconomic data points. But at the minute, with the tariffs and all that sort of stuff, it does take a back seat when the tariffs come into the narrative. So you got to take it with a pinch of salt. But I use these figures to see where the central banks are going to go next. But yeah, we'll leave that for now. So moving on to the indexes. So the DXY, last week we sold off in a big way, really. We've made a new supply zone right here. So as you can see, its price has moved down, it's moved up, and then it's made a new low here. So this area is where people were selling. So if prices move back up into this area, just itch my nose. Prices move back up into this area here, I'll be looking for sells down to here and potentially reach these lows eventually. Something like that. If we do get a bigger move up to here, that'll be a really nice sell. Anywhere up here will be a nice place to sell the dollar. And this is the equally weighted dollar index. Itchy nose. So yeah, we made another supply zone here. So yeah, similar thing up into there. Sales. So waiting for pullbacks basically on the dollar. And we do have a bit of a level here for support and resistance level. Bit of a level there. You can see where it's used as a support, resistance, support. So a bit of a level of support and resistance there. So that's quite a nice level to wait for next week. So moving on to the Euro index, we have come down into below 50 on the RSI, which is good. So I'm looking for buys now on the euro down here. We are in a bit of a demand zone here. So yeah, this could be a nice place for a buy if we get the right setup on the currency pair. Didn't really make any new zones, but yeah, so we're sort of in a cheap area now for the euro. So, but with this news about the tariffs coming out, maybe the euro isn't the best buy at the minute. And like we saw before, MUFG has cut their long euro NZD trade idea. So they were long on the euro against the NZD, so was I, but they've cut that idea for now because there might be some short-term bearish sentiment on the euro. So yeah, wait and see what comes out of these tariffs. If the news comes out that there's been a deal sorted out between Trump and the European Union, then the euro is back on for a buy. So moving on to the pound index, we are at the highs here, and we've sort of not had any decent pullbacks yet. It's been in the extreme on the RSI constantly, really. Make a bit of a demand zone here. But really, if we came down into here, we're still sort of at the highs here. Do you know what I mean? In this range, I'd want a bit of a deeper pullback, because if I go to the 1 month time frame, change it to the baseline, you can see here we want to be in the red for pound buys. But as time moves on, to be fair, this demand zone sort of does come into fair value. When does that happen? Let me just check this. So when did that move up there? 24th of April. Oh, to be fair, give it a day or two and this area down here is actually fair value. So what actually was that? Yeah, so in a day's time, this demand zone would actually be valid from a value perspective. So yeah, if it does come down into there next week, yeah, could be alright for a buy. The pound is very strong at the minute. They are, yeah, they've been strong for a while now, the pound. I think mainly because of the tariff isolation, they've done some deals. The central banks aren't cutting as much. If you look at the fundamental chart, they're number one. The GDP is pretty high, quarter on quarter. Their interest rates is high, but the inflation's, they're number two in inflation. The only country with a higher inflation is Japan. You know, we've still got 3.5% inflation, and we're the highest inflation month to month. So yeah, the bank aren't really cutting as much because they want to cool the economy. So yeah, that's why the pound is strong, I think, at the minute. Core inflation number one as well. So yeah, we've got the inflation's pretty high at the minute, which is pretty shit for people like us. You know, prices are still high, but from a currency perspective, that is going to give you a strong pound because money will flow into countries with a high interest rate. So yeah, so that's the pound. Just look for prices to dip into that demand zone. And moving on to the CAD index. So the CAD is expensive at the minute. We are in this supply zone. I'm not really a strong buyer or strong seller of the Canadian dollar at the minute. It is actually last on the fundamental chart. And with risk being off with the tariff stuff, it could have a bit of a sell-off. So yeah, if it gets a bit higher into here, we could look at sells, especially against the JPY or the Swiss franc. But yeah, not really a strong bias either way on the Canadian dollar at the minute. Moving on to the Australian index. Yeah, so we're cheap on the index as well. We've come down into this demand zone. So if you want to be a buyer of the Australian dollar, you're in a decent place now to look for buys. If you want to look for sells, we did make a new demand zone new supply zone last week here. But the Royal Bank of Australia, the RBA, did have a dovish central bank meeting last week, which did see the Australian dollar sell off. But they are good, they're close trading partners with China. The tariff stuff has sort of faded away in that respect for China, so it comes back to the fundamentals, and the Australian dollar is actually ranked number 2. So they've got some decent data, but yeah, not the strongest buy or sell again for me, because they've had a bit of negative news. I mean, to be fair, it could be seen as a buy, to be honest, against weaker currencies like the NZD maybe. But yeah, it's not really that clear for me at the minute, so yeah, I'm going to leave that. But yeah, if you want to sell the Australian dollar, which I don't really recommend you do at the minute, probably look for prices to come up in this supply zone, and then you can sell and retest these lows. If you want to buy, you're probably in a nice place now. We're underneath 50 on the RSI, and we're in this demand zone here. So that is the Australian dollar. Moving on to the New Zealand index. Yeah, a bit messy. We're sort of ranging at the minute. You can see we're just sort of ranging in this sort of range here. We are underneath 50 on the RSI, which means buys are available. We are in a supply zone though here. Again, the NZD's been quite weak for a while. It's the central bank is cutting the most. They've had some poor GDP figures. So yeah, not really. It's more of a sell for me against the JPY possibly. You can see last week, or the last couple of weeks, NZD sold off against the Japanese yen. So yeah, really probably looking for prices to come up here again to the top of the range, and then we could get some nice sells in down here, something like that. But yeah, no new zones have really been made this week, so we're sort of just bouncing between these two supply and demand zones. So moving on to the Swiss franc. So we are just above 50 on the RSI, and being in a risk off environment at the minute with the tariffs, slight risk off depending what happens. The Swiss franc could come into play like we saw the other week. Look at this here. This was when the tariffs originally got announced, and you can saw the massive buy in the Swiss franc, even though fundamentally it's quite weak because it's a risk off currency, so it does well in periods of uncertainty. It might be a bit different now because we've sort of been there, done that with the tariffs, and we've seen that Trump sort of uses it as a way to get deals done. He starts off high, he says, I'm going to tariff this country 90% or whatever. Everyone gets a bit scared, and then they get a deal done. So there might be a bit of that in it now with the tariffs, so we'll wait and see. But yeah, if risk does stay off, and there's news comes out that Trump is really serious about these tariffs on the European Union, then we want to see probably prices come down into here for the Swiss franc, and then we can get some nice buys from this demand zone up to here, and maybe even up to here, although I'm not sure it can get this high again, but you never know. But yeah, anywhere here, and then we could possibly retest the highs here in this sort of range. If risk comes back on, say for example Monday or Tuesday news comes out that they've done a deal or whatever, and it bounces back in the other way, anywhere up these highs here, and probably want to wait for the RSI to sort of come towards the highs, this would be a nice sell, and then we could probably sell it down to there. probably against the pound. You could buy the pound, Swiss franc, or Swiss yen. So you could sell the Swiss franc against the yen. That would probably be the pairs I would pick for now. So moving on finally to the Japanese yen. So like I said before, we're quite oversold on the yen at the minute. I got long on the yen a couple of weeks ago when it was down here. This was a really nice trade, and I took profit around here. And I could have actually held for a bit longer, which is a little bit annoying. Probably could have doubled my money on one pair. I think it was USD JPY. But yeah, so there is a bit of hidden demand here. Just put that there. You can see how it's spiked down. See this spike here? So prices have spiked down, and then they've carried on and they've made new highs. So proves that this area here, when prices were down here, the yen was bought and went higher. So that's what you call hidden demand. And when there's a bearish candle, that's when it's like a normal demand zone. You can see that people have bought here to make a new high. But when it's a spike like that and you've got the wick like that, that's hidden demand. So what I will be waiting for now, and I could be waiting for a week or so. We got oh yeah, actually look at that. Look at that. So resistance, support. Didn't really act of it here. A little bit there. Resistance, support, resistance. So now I want to wait for the Japanese yen index to come down to here, and then we can retest these highs or even edge higher. Because to me, the Japanese yen this year is the one to buy, because it benefits off risk off, and it's also in a hiking cycle. So if you want to be confident in a trade and make some money from a decent pair, the Japanese yen to me is the one to go big on. There comes points in trading when you're seeing overwhelmingly positive things about a currency, and that's when I like it when that happens, because you're confident in that currency. You know, the central bank's hiking, it benefits from risk off. You just read, the more you read, the more positive things you hear about the Japanese yen. Whereas stuff like the Australian dollar, it's got good and bad news about it. The Canadian dollar's got good and bad news about it. Even the pound, which is doing well at the minute, has good and bad news about it. The more I read about the yen at the minute, it's quite clear to me. So yeah, that's all I'm waiting for. I don't really want to sell the Japanese yen, to be honest. That's that one. Quick check the VIX. So you can see, so the VIX, if anyone doesn't know, what's going on here? 1 second. So yeah, anything above 20 is risk off. The higher it goes, the higher the risk off sentiment. So the VIX is basically a chart that maps the volatility of stocks and things like that. So when it's above 20, it's classed as risk off. So you can see here, this was when the tariffs was here, and then we've slowly sort of moved back as things have settled down into more risk on. So you can see that in the charts, and then you can see it sort of spiked up on Friday when Trump came out with this tariff news. However, it didn't continue. You can see there's a bit of a wick there. So you never know. I think this is markets sort of calling Trump's bluff in a way, like the boy who cried wolf. Do you know what I mean? So whereas here, when the tariffs were announced, people sort of lost their minds a little bit. Last Friday, not really the biggest move, and it sort of faded down as well. Sort of faded down again. So yeah, we'll see. But that's the VIX. Finally, moving on to the majors. So Euro USD. We sort of want to be a buy for this pair. But with the tariffs coming out again, it's a bit of a tricky one because the tariffs should be negative for the euro, but the tariffs are also negative for the dollar, causing risk off. So it sort of cancels itself out. We are at these highs now, so really we want a pullback to here would be nice. This is a nice demand zone, and then we can sort of trade it up to the top of this range. Moving on to euro pound. Is that a new demand zone there? So we made a supply zone here. It's not really the strongest supply zone because you saw it's moved down, it's moved up, and then it's moved down and made a new low here. But the low isn't really, you know what I mean? You sort of want a bigger move. But you can see it sort of came up, and actually that looks like a bit of a liquidity hunt there. So there's a bit of a level here. Prices have come up. And then you've made a bit of a pin bar here, which probably would have taken out traders. Yeah, I missed that trade, but you can see there's a bit of divergence on the CVD as well. So the CVD tracks, it tracks, how do I word this? It tracks sort of active buys and active sells, but it doesn't track pending orders. So for example, if prices are moving higher, or say for example prices made a bearish candle here on this pin bar, but the CVD candle is green, that means there's been more buying in the market, but the prices have done a different thing. So there's a divergence there, which means the pending orders are overtaking the active buying, which is bearish. So whenever you see this, a green candle on the CVD and the red candle here, it's usually a good buy signal, and that would have been a nice trade actually. Where was I? Wednesday, 9 a.m. Yeah, that would have been really nice. It's probably caught up at work or something. I mean, we were still quite cheap, to be fair. We want to sort of pull back into here where the green is, so that went against it. But yeah, that was quite a nice little stop on that, quite a nice little liquidity hunt. But anyway, that's euro pound. So yeah, so anything up to here, if we get a pullback up into this supply zone, that could be quite nice. The euro having some short-term negative sentiment, that will be nice. So moving on to pound USD. Wow, didn't see that before. That is a big move for the pound. So that supply zone has been broken. We can get rid of that. We've got a new demand zone that's been created here. And a new support and resistance zone. Could probably draw that like that. So yeah, pullbacks into this demand zone here, and looking for buys. Simple as that, guys. Really. We just check the 1 month. So if we come down into here. Yeah, so we're not going to get value for quite a while, to be fair, on this one. So ideally what I'd like is a bit of a deeper pullback down to here. If the pound can get down to here, that'll be really nice for a buy down here. This demand zone here if you do go for a trade on here, probably limit your risk a little bit. Just reduce your risk, because it's not really, we're still expensive on the 1 month, and I always like to at least be fair value or cheap or expensive on the 1 month, because it's all about value. You don't want to sell it when it's cheap, or you don't want to buy it when it's expensive. I'll just have a drink. So yeah, that's the pound dollar. Moving on to the USD CAD. So we've broken this demand zone. I can delete that shell. I'll keep that for now. But there aren't really any. No, the next demand zone is down here. But yeah, USD CAD. In fact, you know what? I'll delete that. USD CAD. It's 2 weak currencies, to be honest. 2 currencies that aren't doing that well at the minute. So not really one for me. So I'm going to stay out of that one. Moving on to USD JPY. So I got short up here a couple of weeks ago, and I think I took profit about here. Annoyingly, because like I said before, I could have doubled my money, because it did carry on. So yeah, all we're looking for now is pullbacks, because as I was saying before, this is the pair that I am probably most confident in. So if you do fancy it, you could potentially go a bit bigger on this pair. Obviously, you keep up to date with the fundamentals and stuff, but yeah, this is a pair that you can risk maybe 0.5, 0.75% on a trade. It's because usually I risk about 0.25% on a position. For something like this, you could risk a little bit more. So yeah, anything up here potentially, or even better if we go up to here, that would be nice. And we do just draw a bit of support and resistance there. Not the most obvious level. Bit of a level, sort of. You can see where it's reacted in the past. But yeah, just check the 1 month. So yeah, the 1 month, really we want to, this supply zone here is probably best. This one's still a bit low, but because the divergence in the 2 currencies are so strong, sometimes that can equal out the value aspect. Do you know what I mean? Because sometimes if you wait for a pullback too much, you might not get one. So it's a bit of a risk, but you sort of just got to, that's the thing with trading. It's a bit nuanced. Sometimes it's not really a science, it's an art. That's what people say anyway. There's a good book, The Art of Currency Trading, which I'd recommend, by Brent Donnelly. It's called The Art of Currency Trading. Get that book if you're interested in trading Forex, because it's a brilliant book. So yeah, really, don't know why I deleted that. I want to, yeah, I want to come to this supply zone here. That would be ideal. But if we do come to this supply zone here and I see a nice entry candle, I might enter, but just a bit of a smaller risk. So yeah, moving on to USD Swiss franc. We made a new supply zone here. But again, that's probably a little bit too low. You probably want to look for this supply zone up here, and then we can get sells in. If risk comes back on though, this isn't really a pair that I want to get involved with, because they're both weak. Swiss franc, it would only really be a buy if we get risk off, because it's a safe haven currency. Okay, so moving on to Australian dollar, US dollar. We made a new demand zone here. But again, not really a pair I'm looking to trade. Not the strongest divergence in my books, to be honest. So yeah, I'll leave that one. Finally, NZD USD again. Not really the strongest divergence. They're both sort of weak. NZD's weak and the dollar is weak. We did make a new demand zone here. But yeah, if I want to sell the New Zealand dollar, it's probably against the Japanese yen. And if I want to sell the US dollar, it's probably against the Japanese yen as well. So yeah, NZD USD not really interested in at the minute in trading. So yeah, and that is all the majors. A few currency pairs that I am interested in, like I said, Swiss franc JPY, NZD JPY, bit of a supply zone there. That could be quite nice actually. That could be quite nice if we get up to here. Basically all JPY pairs at the minute. But yeah, that's it guys, that's the video, that's the weekly analysis. Yeah, I think we just need to wait and see next week, see what the news is that comes out about the tariffs, see how the European Union react to the tariffs, and just wait and see. I think I said it a few weeks ago in another video. When they have moments like this in trading, you've just sort of got to sit on your hands, because you don't need to trade every week. You know, you can go 2 weeks without putting on a trade. I've been burnt in the past from getting FOMO and wanting to get in trades. I still get it now. If I've had a week or two where I've not gone into a trade, you know, I get a bit itchy, because I shouldn't really say this, but it's quite a thrill when you're in a trade and it's going for you, and you're winning and you're making money, and you're seeing it go down, and it is a little bit of a thrill. And I shouldn't really say that because you're meant to be robotic, but yeah, I'd say next week we've got some big data points coming out. Just keep an eye on the news about the tariffs mainly, and just watch the markets. We're waiting for pullbacks in most pairs anyway. Well, I am. So yeah, I think next week's going to be a bit of a wait and see trading week, but we'll see what happens. So yeah, thank you for watching. Good luck with this week if you are trading, and I will see you in the next one. Take care. Bye bye.